For more on Amazon, let's bring in Brent Thill, Managing Director and Tech Sector Leader at Jefferies. Brent, great to see you. What's your take? What do you make of this light guide for Q2?
Hi, Melissa. The guide doesn't really matter. They always guide conservatively, so I kind of washed that out of the mix. I think the most important thing was AWS, which is 50% of their market cap, had 17% growth, well ahead. Their backlog growth last quarter foreshadowed that AWS was going to be good, booking over 40% growth. In backlog, you're going to have revenue growth re-acceleration. So we're seeing AWS inflect. We're seeing the international business become profitable, which we were expecting a loss. And then the third is the ad business. Advertising was ahead by a bit. So I think you have effectively a game of inches on the beat. You don't have a blowout here, but you have consistent, steady recovery. And all eyes were on AWS. So that's been phenomenal to see. Now it's going to shift to AI. You know, where are they at? They're behind Microsoft. How are they playing catch up? Jassy said last quarter, this is going to drive billions of dollars, trying to get more color on that. So everyone's going to go direct to AI and what's the next leg for this. But overall, a really solid print. I don't pay too close attention to the guide. They've been blowing out the guide every single quarter, and they've had a really disciplined focus on the bottom line. So we're encouraged by what we're seeing. We're not encouraged by the stock reaction. And welcome to be a software internet analyst right now. No one wants to talk to us because everyone wants to be a semiconductor analyst. So that's the only downside right now.
Your day will come, Brett. I'm sure it will. In 20 minutes time or so, what do you want to hear Amazon talk about in terms of the next leg for AI? Instead of just providing the cloud services that are needed to support AI, what do you want to hear from the company?
Number one is time to revenue. So we are in this biggest hype cycle ever for AI. When's this actually going to result in revenue? Number one. Number two, what is the differentiation against the rest of the competitors? Third, Microsoft is going up and down the stack. Security to applications to productivity tools. They have an advantage in the world of AI because they can go up and down. AWS doesn't play in the apps game. So how can they enable broader adoption by these enterprises? Because right now, Microsoft's running away with the show. And so how do they come up with something that's unique, exciting, interesting, that's going to catch people? And right now, I don't think we've necessarily maybe heard that. They probably have that behind the scenes. We haven't heard it from them. So we'd love to see that. But I think it really goes down to the reason why tech investors are so involved with or excited about what's happening in internet and software right now is that hardware, all of AI is in the infrastructure category. It's at Dell, it's at AMD, it's at NVIDIA. And right now, it's really hard to get the interest of tech investors because that's where they want to be, because it hasn't come to the software layer yet. It will. And so that's kind of the big question is, when does this actually have a bigger impact on revenue?
Brent, it's Karen. Thanks for being on today. How do you think about valuing AWS, aside from the rest of the business? What are the right metrics what are the right multiples?
So we do, Amazon's valued by us by some of the parts. We break all the businesses apart and apply different multiples. Retail business trades at a lower multiple, AWS trades at a higher multiple. AWS today, in our view, it's about 50% of the market cap of the company. It's the most important business. If you spawn off AWS into its own side business, you effectively, again, at a $100 billion run rate, investors, in software are paying anywhere between, I name it 7-Eleven, my favorite convenience store, anywhere between 7 and 11 times forward revenue. And you could argue, again, maybe it's a little lower, maybe it's higher. We can now look at margins. I mean, the margin was one of the highest margins we've seen at AWS at 38% for the quarter. So I think you can look at it from an EBITDA basis. You can look at it on a multiple of revenue. As I said, 7 to 11 is kind of the range. And again, you can start to really look and understand why this business is so important to their overall market cap if it was a standalone business. We put a premium on the business because of they are the number one vendor. They are the furthest ahead in revenue. If you combine Microsoft and Google together, they still don't even equal Amazon's revenue. So again, big premium in our playbook. Again, some of the parts